Hey, this is Justin with DayTradeTheMarkets.com on Wednesday, October 2nd, 2013. And I wanted to take a closer look at a couple of nice rallies in the gold market and also in the crude market, and just look at the clues as to when the market was breaking out, and then also talk about the idea of once, if you are fortunate enough to get into a really nice trade that's really running, some ways in which you can manage that to try to maximize the gain that you get on those type of really nice trades. So talk about two things with that. So if we look at the gold market here today, the first thing we notice is the first bar of the day was what we call a level 3 buying aggression bar. Okay, so we want to ask ourselves, number one, can the low of that hold, and can the high get taken out? But you can see as that was developing, or as soon as that formed, we started to get some what we call level 2. So level 3 is extreme buying aggression. Okay, but we didn't get a follow through originally, and then we had level 2 or strong selling aggression within that. So that's setting up basically, we call these mini battles. Until this area breaks higher or lower, we consider this to be a pretty tight consolidation, and you can see that's exactly what happened. We had the market, tested into the lows, tested into the highs, tested into the highs, tested into the lows. Couldn't get anything to happen until we finally broke out, and did so not on a head fake, but we did so on what we call level 3 or extreme buying aggression and a high velocity move. So whenever you have a pretty well defined consolidation area, beyond just the high and low of the day, but you can even use this on just thinking about highs and lows of the day, and you break out with a level 3 buying or selling aggression bar that is, like I said, on the high or low of the day, and then especially if it has immediate follow through, that's a very good indication that a breakout is likely underway. So in other words, we had, just to review, had consolidation when we tested the high, as opposed to when we down here and we tested the low and it was just on a gray bar. There's nothing there, but we test the high here and it's on a level 3 buying aggression bar with quick follow through. That's telling us buyers are very much in control of this market. Okay, and you can see that maintains. We have a level 2 bar, test right to the low of that. Here's a high velocity move and a level 3 bar. We don't even test to the low of that. We test right back to the high of this high velocity move. That's what we call a high velocity move continuation trade. Here's another level 2 bar, another level 3 bar, and a high velocity move. Here's another level 3 bar. We tested the low of this one. You can see it's not until this level 2 bar here that it's our first buying structure since this breakout began that doesn't have immediate follow through, or at least the low holds. And you can see a little bit of selling comes in that has some follow through. And this doesn't mean necessarily that that sellers have taken over. It just means this pure wave of buying that we saw on the breakout here, it was purely controlled by buyers. It's at least now two-sided. And you can see that's what's happened. We essentially trade back down to the low of this high velocity move, which has a low right in here. Okay, so you can see it just means that we're more of a two-sided type of a scenario. So when you get into a nice trade like that, and it could be because you took what we call a level 3 retracement trade, or it could be because you took the high velocity move continuation trade right there, or took it right there, or took it right there with the low of the level 3 bar. Whatever the case may be, you're into a move. Ideally, theoretically, you can certainly scale out if you want and take some profits along the way, but you want to try to hold that trade as long as possible until you actually see there's evidence that the buying is no longer one-sided, or that some selling comes in. So whether that's when you place a trailing stop below each of these level 3 bars with 3, 4, 5 ticks, and get stopped out, say right in here, or whether you wait for a level 2 selling bar with some follow through, which would be maybe down in here. Whatever the case, however you'd like to manage the trades, you're waiting for evidence. You're wanting to hold on as long as possible with some evidence, so you don't bail out. This is a good problem to have. One of the frustrating things I know that a lot of us go through is when you're into a good trade, and then for whatever reason, fear, or you're afraid to give it back, or whatever the case may be, you get out of what could have been a home run trade a little bit too early. And so that's one of the ways you can use this. Number one, to identify when a breakout is for real as opposed to a head fake, and then number two, to try to hold on as long as possible until there's actual reason that that the reason you got in for the trade is no longer specifically valid. So hopefully that makes sense. Crude oil is kind of a similar scenario today. You can see at the end of yesterday we had this buying wave, and that's right where the market tested into early today. But our first structure of the day that we saw was a level 2 selling aggression bar. We did get a little bit of follow through. Then we started to decelerate and started to get some level 1 buying, and then again we make new highs for the day right in here. But rather than it being on a gray bar or a level 1 bar, this is a level 3 bar and a high velocity move. Immediate follow through. That's giving us a pretty good indication that buyers are in control of this market, and this is likely to be a breakout scenario. So, whether you just buy on the breakout, whether you wait for the, high velocity move or level 3 follow through trade, continuation trade. If you could have waited for a retracement down here, it didn't happen. Here's a retracement to the low of this level 3 bar right there. A lot of ways to play this, but once you're in it, you want to stay in that trade until you have some evidence to get out. I mean, you could make a case that you get out as soon as this bar forms. You could also make a case that because it's our first selling bar. Now, what ended up happening is this got rejected right away. So that's telling us again that a breakout is most likely underway going forward here. But you could just get out at the first sign. You could wait for a full bar below a selling bar. You could wait for 3 or 4 ticks below a selling bar. Whatever the case may be, you have some kind of methodology, and we talk about it from being really tight to being as loose as possible, depending on the situation, but at least you're using evidence. And you can see, again, we broke out again here, had some follow through with these level 3 bars. Here's our first level 3 selling bar, and it started to give us a little bit of follow through. Now, again, this doesn't mean the market's going to sell off and make new lows, but it is telling us we've gone into a more of a two-sided market. And you can see the market tests in this level for a while until we have another breakout. This one kind of failed, though. I mean, they're not going to work 100% of the time. They're very, very high percentage. But just to be fair, this is a scenario where on this breakout we didn't get any follow through. So but you're going to know that because as soon as that bar closes, the very next bar closes. It didn't have any follow through. The low of this bar held okay, but this one certainly was telling us that this breakout wasn't as strong. Now this one you can see got follow through right away. So again, just the idea here that when you have a consolidation or you have a high or low of the day, just like we see in crude oil today, here's our high of the day. We break out on a level 3 bar. Same thing if we go back to the gold market. We put in that high of the day early on. We had that mini battle right here. We had that high of the day right in there. You can see we broke out with follow through on this level 3 bar. So it's just giving us real good indication of what's going on in the time and sales and the order flow as to when is it extreme, when is there true extreme buying aggression, when is it just moderate, when is it a head fake, that sort of a thing. And similar case here, let me just bring over a silver chart here. Similar scenario here. You can see again we had some consolidation early in the day. We made new highs early on, wasn't on a level 3. This time we made new highs on a level 3 with immediate follow through, and this market was off to the races. Wasn't until we saw some selling come in right here that this shows us more of a two-sided market at that point. So that's silver as well, but again, that's the idea here. We're just looking for some real clues as to when a breakout looks to be for real. Is it going to work 100% of the time every time there's a level 3 bar on the high or low of the day? No, but it's going to give you a very, very strong edge to tell you when these vertical buying and selling waves, which are certainly the best opportunities we have in trading, when these vertical moves are potentially underway. And it gives, I'd say it's in the 80 plus percentile range when you get one of these on the high of the day with follow through, that we're into a vertical type of a scenario. So I guess that's it for now. If you have any questions about that, certainly let us know. We'll talk to you soon.